All right, great. Good evening to everyone and welcome to this second session or second webinar on improving your sales skills, upgrading yourself, and being better on the field. So today's topic is how to sell mutual fund SIPs. And today we have with us Mr. Samir Phal. He is a very respected name in this industry. He's there in this industry for more than 15 years now. He has spearheaded some of the big mutual fund companies in his 15 years of career. Presently, he is with IDFC Mutual Fund and heading the entire Goa operations. And learning from him is a privilege for all of us. Samir, the stage is all yours.
Basically, now a lot of people who are on the call, I believe you guys have exposure to financial products. You are in the field of marketing financial products, and mutual funds is something which you cannot ignore at all. In fact, it is in terms of financial industry, it is the fastest growing industry right now in India. We have already touched a figure of 40 lakh crore, and the growth rate of mutual funds is almost about 25% per year. And we are just at the tip of the iceberg. In India, the total exposure to mutual fund, even with so much of participation now and so much of awareness, is just close to about 4 odd percent. Mutual fund is not just a product for investment; it is also a saving product. It is also a solution building product. It is also a product which you can use as an emergency fund. You can use as a retirement fund. You can use as your growth fund. So mutual fund gives you all that particular flexibility. It also gives you flexibility and an avenue to invest, not just participate in India's growth story. You can also participate in investing across the geographies, across the world. It gives you access to all the possible asset classes also, right from people just know mutual funds as investing in shares. You have options of investing in bonds, you have options of investing in gold, you have options of investing in other metals, you have options of investing in bonds across the world, you have options of investing even in real estate across the world. So mutual fund is a growing field which is growing at a speed of knots. So in basic, a mutual fund is basically a collective fund which allows a lot of people to participate with a common purpose. So what happens is a mutual fund becomes a pool of money where lots of people invest for a particular aim. Mutual funds in broad category can be defined as debt and equity and cash funds. So debt funds basically invest in bonds, which are supposed to give you steady return. Equity funds invest in basic of listed companies in the share market, and you have cash funds which invest in government securities of a very short duration, which is just for parking of emergency funds or parking of short-term funds. So what happens in a mutual fund is a lot of people like you across the country make contributions in that particular fund. That pool is managed by an expert who is a fund manager. So there are different ways of investing in mutual fund. One of the most popular way of investing in mutual fund is called SIP, that is systematic investment plan. Since you guys are into sale of mutual funds, what is happening is SIP has taken off very rapidly in the country. If you see, there was a graphic I had shared with Sachin, wherein you can see we have reached a figure of about 12,000 odd crores in terms of monthly SIP flow in Indian mutual funds. That figure has been growing by almost about 26 odd percent year on year. There are lots of people in the mainstream who are coming, they are doing SIPs and they are participating in India story. So we can start with the basic skills of selling mutual funds. See, few core skills which are required to start your mutual fund business and start marketing mutual funds as your core product is you need to have a prospecting plan. So what we mean by prospecting plan is when you approach a person for selling your mutual fund product, you need to know about that person in depth. So you can't actually sell return to an investor. So when we talk about real prospecting plan, what we talk about is knowing the investor's financial health. I think Finergy has developed a superb application which actually gives you an idea of a financial health of that particular person, which Sachin had shown me a prototype, which I would actually urge you guys to use more and more. What happens is when you are suggesting a mutual fund and SIP to an investor, first thing you need to know is not his return expectation. You need to know what his current financial health is. You need to know what are his liabilities. You need to know what are his assets. You need to know where he is actually saving and where he is actually spending. That will give you a holistic idea of where the particular investor, I mean, what is the particular solution you need to give it to that particular investor. Secondly, what happens is when you go and approach an investor, most of them have set mind. They have a rejection saying that I don't want to invest. This has risk, that has risk. Some people have genuine risk. So you need to know how to distinguish between an excuse and a real reason. Secondly, what you need to know is a lot of times as advisors, every one of us is guilty of giving too much information to investors. So we need to know what is essential to know and what is nice to know. I hear some of these, I mean, newer distributors, when I meet some of these newer distributors, they start talking to investors about crypto. They start talking to them about how the world financial markets are changing. And for an investor who is, say, a teacher in a primary school in Goa, who has a particular EMI quotient, who has a particular goal of investing in small savings, you talk to them about crypto, you talk to them about Binance and this and blockchain methodology. It is actually going to scare the investors rather than bring him closer to you, because then he starts feeling that this is something which is so complicated that he shouldn't even think about it. uh, Another important thing is you need to know how to make emotional connection with your prospects. So when we talk about emotional connection, see, money by itself has no meaning at all. You need to show that investor what money will give him, why he need to save money. A lot of times we talk about giving a solution to that particular person's goal. I will tell you 80% of the time your investor doesn't know what his goal is itself. You need to define that goal for that investor. There are a lot of investors who have children but they have not thought about it. You need to define that this is the goal which you need to have for your children's education. This is the goal you need to have for your house, suppose you want to go, for your marriage, for somebody unmarried. Most important goal which everybody has to have is retirement goal. Some people might say that I have ancestral property, I have business, income will keep on coming. Your income might keep on coming, but your ability to be in that business and still generate income might diminish. You might have a health problem, you might be stuck with old age, you might be stuck with some unforeseen circumstance in your business. So everybody in India needs retirement goal, because unfortunately, like developed countries, we don't have a dole to follow. Government will not give you money if you cannot earn money. In our case, we don't have that social security blanket. Making emotional connections with people is very, very important. That's why when you decide on goal, you need to decide on a goal which has emotional value to the customer. Financial value comes later. Finance follows emotion. Emotion is the basic prospect of selling that particular product. So the three major focus areas which you need to rely on is prospecting. Prospecting is basically 70% of your work time. Prospecting gives you an idea of what that investor needs, what are his requirements, what are his limitations. All these come in prospective this thing. And when you go to prospect, as I say, please do not sell returns, sell goals to that investors. Define a goal for that investor. That is what is important. Okay. Second comes the presentation skills. The presentation skills are basically how you present a particular product. For that, we can have separate skills also. You have presentations in the form of mass presentations, you have one-on-one presentation, you have now social media presentations. Different options are there. And lastly, which you need to have is objection handling. A lot of advisors fail when it comes to objection handling. They take objection as a kind of affront by the investor. They take it negatively. Unless the customer with most number of objections will be your biggest customer and will be your most trusted customer. The customer who just listens by nodding at every sentence of yours is not going to be your customer, because when the customer is just nodding, you don't really know whether that customer is listening to you. And even if he's listening, whether he's listening out of obligation, interest, or what. So look at objection. When you have objections placed in front of you, that is the time when you are closest to your sale. So just remember, do not get scared of objections. Welcome objections. See, remember, the critical thing when it comes to prospecting, you are selling yourself. The product comes secondary. As an advisor, you are selling yourself. You are selling him as your well wisher, not just well wisher. You are selling him as your best wisher. You are selling as an advisor to that investor that you are the one who is his caretaker. The investor invests so much with you, not just in terms of money, but in terms of time and emotional investment, that you are telling the investor that I am here to take care of you in any circumstance, in your good times, bad times, and even when you are not there, which you guys mostly do with in terms of insurance selling. You are the one who is there for the investor at particular time. You must set the agenda. As we say, when you are setting the agenda, don't be very forceful and get into argument with investor. People mistake setting an agenda as literally forcing somebody to this. You should never argue with the investor. Try in a subtle way. Setting agenda means basically you are telling the investor this is good for you, this is bad for you. you are telling him that you need to choose and you need to slowly divert him over there. If you get into an argument or a shouting match with the investor, you're lost at investor. Product knowledge is a key to sales success, but it is not always 100% of time. The most successful distributors in Goa and across the country, which I have seen, they are not the ones with a CFA or a London School economics degree. They are the ones who have grown business in a simple way. They are the ones who know what to tell the investor and, more importantly, what not to tell the investor. The other factor is concept is the magnet. See, your product or return is not the main reason why the investor buys it. The concept which you bring to the investor, the way you structure this as not just investing in mutual fund as a product, but investing in mutual fund as a way of life, that is going to give you success. Another thing is, when you believe, you will be believed. One of the simplest tools which most of the distributors, retail distributors in Goa use, is they take their own statement of SIPs. That becomes their primary selling tool, because what they present to the investor with this is, I believe in it, I have made money in it, I have got success in it, you will also get success in it. So always what happens is, when you want to sell any product, I remember last time you guys had a session with Ronaldo, you need to take your personal health insurance example to show investor how it has helped you in a bad time. Same way with SIP also, you need to start with your own SIP, start with your own example, go with your account statement. That is where the investor actually gets that confidence that, yes, it's very important to divide your customers also into particular set of investors. What happens is, in our case, in mutual fund, you have a product for everyone. You have a product for somebody who wants to invest 1,000. You have a product for somebody who wants to invest 1,000 crores. So from lowest denominator to highest denominator, there is a product everybody has. I mean, there is a product for everybody in mutual funds. So you have a particular set who are wealthy. They are well-off people. They have got sufficient financial sources. Those are people, for those kind of customers you will suggest a different set of product. Then one of the most growing segment in particular mutual fund industry is retirees and pre-retirees. If you see, a lot of people, especially from government service, who retire easily with a kitty of 1 crore and above, which is a very fleshy segment. So those people also have a particular set of need. Then you have the third one, that is the needy. The needy is somebody who is just starting out business. He has a lot of his goals, say children's education, building a house, getting a car. That particular segment sometimes you might find that that particular segment is not really attractive, because that person is investing smaller amount. And just remember, you never know when the tide changes, when that person changes his job, when he has extra windfall. So you need to handhold that particular investor also. And you have somebody called solution finder. These are investors who tend to try to impress you with their particular knowledge. They try to tell you that I know all the solutions to it. I know this to it. I know I use this app. I know that app. But if apps were everything in India, all the apps with thousands of crores of investment, from Paytm to ET Money to Grow to Zerodha, wouldn't have just got a 50,000 crore kitty. The biggest distributor in Goa manages 1,000 crores in Goa, such a small state. And all these giants put together just manage 50,000 crores. So the solution finder who comes with you saying that I have got this app, that app, just remember that you take it on the face value. Don't argue with him. You look at him, but you tell him that this is a solution which I have, which is readily available to you. You look at it as an alternative. Like when we go to a doctor, we just don't take one single opinion, especially if the doctor says you have a big ailment, you also go for a second opinion. Same way, for this solution finder, you need to find a solution which is different from what he thinks he knows. Now, when you are mapping these investors, you have to know that in which category they are there. One is a category which is already ready. They are looking at investing. They have decided everything. They just need your help in taking that final step. So with them, you will behave in a different way. With them, you won't go and give a full gyan. You don't want to make a customer kundli, and you don't want to go into nitty gritties of this, because that investor is just looking at a final solution of investing. There's somebody who is looking around, like I was saying about these people who go to Grow, like Zerodha and whatever, ET Money. So they are looking around for prospects. So those are the prospects to whom you need to convince that besides all these, you also need to diversify not just your investment, but you also your advisors, so that at a particular time there is somebody who will help you out in times of necessity. Then there is another category which is dragged. These are people generally who belong to the second generation of investors. They are generally dragged by their parents, grandparents into investing. Now, initially you might find that they are not interested, they don't want to this thing. But remember, if you ignore this particular category, you have a risk of losing your main customer also. So you need to get them involved in some way or the other. Maybe not directly investing, but you need to keep them on your right side. The third type of category, which is there is a curious category. That person doesn't really know about this particular product, doesn't might not know about mutual fund, but that person wants to dip his toes in this mutual fund industry slowly. So for that particular investor, you need to know what kind of product is it. You need to know that you can't come with extreme force in front of that particular investor, because that person might get scared and take a step back. So that person has to be slowly, literally cajoled into coming into investments. uh, the biggest source, since you guys are in this industry, of getting clients is client referrals. There is nothing as good as a proper client who is giving your testimonial to a new client. So that is something which you really need to act upon. When a client gives you a referral, sometimes we have a habit of postponing those particular meetings and all. Be very quick. Even if you can't meet that new investor, you need to at least make an attempt to meet that new investor and tell them that I need to call you. See, one of these good habits which I use in my personal life also is, sometimes when you call a particular person, you call a friend and all, sometimes you just want to have a small chat with them, you want to do time pass with them. That person doesn't know why you're calling, and that person doesn't pick up your call. So it's always prudent that you send a message to that in friend of yours or somebody whom you're calling immediately, saying that I was just calling for time pass, or I was calling to ask you about this. So what happens is, sometimes it helps that other person who is on the other end to know that you made an attempt to reach that person, you couldn't meet. Maybe there is another time when they should make time for you. Okay. Elevator pitch is something which is very sensational, romanticized. Elevator pitch is basically within 2 minutes you make an impression. Within 2 minutes you make an impression. Remember, in these 2 minutes, don't go to talk to investors about return. You talk to that investor. One of the most simplest and beautiful pitches is, I am your goal guide. You have a financial goal. I am your financial goal guide. Uh, what happens is, sometimes for a lot of people who have stage fear and all, presentation becomes such a big thing that, forget about the investor, it scares you yourself. You get very nervous about presentation, how I will do presentation and all. They are necessary evil. Remember, to grow your business, you need to build yourself up, and you need to do this presentation. Don't look at it as something which will give you tension, or which is something which is bothering you. A presentation is basically a prospect for you. Presentation is what gets you business. See, the five elements are basically of a presentation is the concept. As I said, don't talk about return. Talk about the concept of investing. Talk about mutual fund investing as a way of life, not a way which you have to do forcefully. It's a way of life. It's a way of basically improving your quality of life. Then connect it with the people. See, a person who is a single person, who has a lot of money, who has no responsibility, who has no prospects in his life, can never be your great customer. So you need to connect it to the people. Like, for a parent, you need to connect it to the children. For a person who has, I think, plans of getting married, you need to connect it to his future partner. Also connect it to their parents, especially when you are selling a retirement product, because tell them that retirement just doesn't give you money. More than money these days, what is very important is giving you dignity, so that you are not dependent upon your children are not your retirement fund. This is one of the most important concept you need to ingrain in people by connecting it to the people. See, what happens is, many a times people say that you guys talk about investment so much that I have to sacrifice today for tomorrow. Do not sacrifice today for tomorrow. What you do is, you take a part of it, of your investment, while living your today, just to make arrangements for your tomorrow. Then you also need to show the risk and limitations. What are the risks involved in mutual funds? In equity, there is risk of volatility, the limitations of it. So that, say, a mutual fund, to give you an example, when you are selling holistically, a mutual fund will not give you insurance. Mutual fund is basically something which you invest, gives you returns, and that is your particular goal. So you also get all that option also when you are talking to investors. What happens is, sometimes what happens is, we are scared of telling that, yes, there might be some aspects of mutual funds or some aspects of our product which can actually cause a loss or can actually be harmful. Be very open with the investor, because that is the time you build that particular trust with the investor. Then what that investment does for you, how that investment gives you, like in mutual funds, as I was telling you, you have an option of investing in every asset class possible, which is not possible with many other products. You need to tell the investor that in mutual funds, you can not just participate in in investing in bonds and equities, which is more popular. You also have option of investing in gold. A few popular objections are, I can't afford to take risk. Okay, you don't take risk. You invest in very safe instruments, which is basically a bond issued by government of India. You have products like that, which is in fact safer than even your cash, because cash is a promissory note. A government of India bond cannot fail, because then it will lose face everywhere. It will lose its credibility to even print money. Then there is another set of investors who says market is too high. Who knows whether market is, see, when I started my career, that time Sensex was at 5,000. Right now Sensex is at 62,000. So if we had kept on feeling that it is high, I would have never made money in market. And I'm a very conservative investor, honestly. Even though I'm in mutual fund, I'm a pretty conservative investor. Most of my investments are purely in terms of SIPs. But even then, just because I was disciplined enough, my, if you open my portfolio, it will be showing about 24.8% return. This is over a period of 16 odd years. I want to wait and watch. Everybody thinks that they are the next Warren Buffett, but Warren Buffett is the most famous investor in the world. And you know what Warren Buffett is? One of his biggest strength is he is 92-year-old and he started investing at the age of 11. If he wanted to wait and watch and invest, he would have never made that money. I lost money in an equity mutual fund 3 years back. This is another popular thing. See, from my own experience, I will tell you, when the when I started my career, everything was going rosy. I started my career at 2006. In 2006, every damn stock was giving 100 to 100% return. Everything, it might be the most rubbish stock to the most faltu company, they were giving huge dividends, huge amount of money was made. And you thought that party will keep on going. Then came the global financial crisis of 2008. At that time, everybody who was connected to investment and financial field thought that that is the end of us. The world will never recover from it. And people lost a lot of money. Almost 68% negative return is huge for people who, and a lot of people in this boom period had taken loans to invest, had borrowed money from invest. So you can imagine what happened. So what happened in that particular time is, out of 100, almost 95 people ran away. They didn't want to come to market. Then the market started picking up slowly. It started showing some growth. The recovery was very painful, but it started happening gradually. Then in again 2011 came the crisis, wherein even in India we had this fragile economy period where the interest rates were raised by central banks. And that time, out of 100, I can say almost 60, 70 people ran away. Then came another shock in about 2017 when they imposed this capital gains. That time, out of 100, maybe about 50 people ran away from investing. If you go to see the trajectory from 90, 70, 50, what happened was, the best thing what happened to market was when the COVID crisis happened. When the COVID crisis happened, it happened in such a sudden way. Most of the people were in so much shock that they couldn't invest. And surprisingly, you will realize that out of 100, 95 people stayed put. And those are the people who actually made tremendous money. People who are talking about making money in markets and mutual funds are the ones who stayed put during this COVID period. There were some extremely lucky people who actually came in COVID period, but this is the time when, as I say, out of 195 people stayed. And even now, when there are ups and downs in the market, Ukraine war happened, then again, US market started falling, crypto fell, one of the best things what has happened in Indian market is SIP figure has actually grown from a figure of something around 1,000 crores, we are at 12,000 crores as an industry. The amount of money which Indian investors have actually pulled in and helped market keep is phenomenal. Last year, we had almost about 2.5 lakh crore of foreign money flowing out of India. It just didn't flow out of India, it flowed out of all other markets. Korea and all were much, much worse hit. But the Indian flow, the Indian investors' faith in the market kept the market up. Even now, when you see from 66, it came down to, from 65, it came down to 60, went up to 63. We are there and there about. Last year, in fact, we were the best performing market across the world. What Indian public has shown is they have shown stickiness. And more than Indian public, I would say it's the advisors who have held investors' hand, showed them that by being uh, long-term investors, you have reaped benefit. Show faith in us. Indian economy is going to grow. Let us also grow together with it. And as I say, the biggest trick in making wealth is not about getting the big star or the breakout company. It's just longevity with good company. The compounding effect is so huge. If you just invest 1,000 rupees of SIP over a 30-year period, you know how much money you'll make? You'll end up making, by a simple calculation, around 75 lakh rupees. In SIPs, we use a very good thumb rule. It's called 15, 15, 15. If you are investing 15,000 rupees in SIP over a 15-year period with 15% compounding, it gives you about 1 crore of rupees. with this, I would like to just close my monologue, and I would actually want you guys to ask me any questions, which is what will actually make this session a success.
Hello. Am I audible?
Yeah, Pritam.
Yeah. As you said, talking about customer.
Yeah.
In what way? Could you just little bit elaborate? Like, in what way when you say tracking about a customer? In what way? Like, which are the steps more easy we have to follow? Like,
Pritam, I didn't get your question properly because
I mean, if we have an investor,
yeah,
it's the first prospect we have an investor.
yeah.
Tracking should be in what way? It should be in a yearly basis. We have to sit with the investors, or a quarterly basis, or how it has to be. Like,
Pritam, as frequently as you can, that is what gives you a better handle. What happens is in insurance generally, suppose you sell the investor a motor policy or a health policy, you will generally meet the investor once in a year. What happens in mutual funds is you meet that investor on a constant basis, say a quarterly basis, or you do a portfolio review with that investor. On monthly is too early, quarterly or semi-annually becomes good. What also happens is at the end of every financial year, you make a habit of going with that person's statements, with capital gain statements or financial statement, to allow them in terms of helping them with the tax filing, or allow them with an opportunity to interact with you to talk about a new development. Suppose, take for example, last year, one of the ways you could talk to investors is India was doing well, China was doing extremely well, China was going through COVID and all. So there are companies like Edelweiss and all who have a Greater China Fund. So you go and talk to them about the prospect of investing in China. Then again, a new product was launched wherein you could invest in real estate across the world. So you go and talk to the investor on that basis. In an insurance related product, which is generally a more of an annual product, you don't get that opportunity. Here you get new prospects. Today, for example, what happens is mutual funds also keep you on your toes, so they keep you abreast of current happenings. Yesterday there was this news about Adani, so you go and talk to the investor, especially an investor of yours who invests in direct stocks. Tell them that look at how well Indian mutual funds are regulated. If you go to see, there was not even a single active fund in the industry who had any exposure to Adani. So you go and tell the investor these kind of factors. You go and build a conversation with them. People like to talk about stock market because stock market connects everything, right from a Ukraine war to government changing in US to mine being allotted to Adani in Australia. All these topics now become topics of current chat with you. So use that opportunity to connect with investors regularly. As I said, because in insurance you have that limitation that you can actually meet the investor for business once in a year. Here you have an opportunity to meet the investors regularly. And the more you meet the investor, the higher is your prospect of making a sale. And what happens is some of the most successful distributors in our industry, people who have been there for a long time, what they do is they take out a list of their old 100, 200 clients and they do calling maybe once in 3 years or so. If even if you see your own customers, the salary which they were earning 3 years back and salary which they are earning now, there will be some difference. So if the investor has started with you with a 1,000 rupee SIP, the investor will now have a higher corpus, say about 2,000, 3,000. So you talk to that investor about increasing that SIP amount. The investor's life also goes through different phases. That person might be single or newly married at that time. Now he has had a kid. So you go to the investor for his kid's birthday if you're very close and all, and you can pitch to make a investment in child's name right from the day one as a birthday gift. Start with investment for the child's education. So as I said, this gives you more of a continuous, it gives you opportunities to continuously meet the investors.
yeah, thanks a lot.
Yeah, Yogesh.
I want to ask.
Yes, Yogesh.
Hi, Samir sir.
Hi, Yogesh.
Okay, I just want to ask. Normally when I go to meet clients for mutual funds,
yeah,
most of them who are already a mutual fund customer, the first question what they ask is whether this is regular or direct. Normally, there is a distribution fees and all. But most of the people, they ask about why regular. We can do it direct through Grow app is there, Paytm is there, or many apps who are giving wherein you can go and buy direct and save that 1%. So most of the times, I get little hesitant of answering. If you would get this question, how would you tackle this?
One of the first thing is see, you need to tell an investor, see, right now Google gives you all answers. In fact, ChatGPT gives you all answers. Suppose you are detected with a particular ailment, Okay, you can find that answer on, suppose you get bronchitis. If you type on Google also, it will give you a solution. It will give you a solution, have this particular antibiotic, that particular antibiotic, but you still go to a doctor. Why? Because you need that person who understands you individually. The direct app or the direct investment tool, which is made available, gives you general answers. You tell an investor, they are saying that with direct, they are saving a lot of money and all. You ask them who is the main financial decision maker in their family. And if something happens to that particular member of family, ask them, does their family have the capability, intellectual capability of doing transmission process in mutual fund, although it's actually not a claim, is one of the most cumbersome processes which you have to go. And if you invest in mutual fund, generally you will not invest in one mutual fund, you will invest in 5 to 10 mutual fund. Each mutual fund company has a whole series of requirements to do that particular transmission. To do that thing, does their family have that bandwidth at that particular time when they have lost a family member? Do they have the emotional stamina? Do they have the financial stamina? And do they have the intellectual stamina to take care of? Just because you want to save on somewhere about 80 paisa, are you willing to take that risk? With an advisor, you need to tell that particular investor who wants to go direct, you know how much of unclaimed money is there in Indian banks. It's roughly about 42,000 crores of unclaimed money, which nobody knows what the prospect of. LIC itself, I think, has somewhere around 21,000 crores of unclaimed deposit, unclaimed money. And where it goes, once it is unclaimed, it goes into something called investor education and protection fund. To get from that, you would actually spend, even if you're well connected, minimum 6 months. Do they have that capacity to do that thing? Secondly, what happens is when you go direct, most of the investors ask them, when you go direct, which are the funds you have used? They will tell you, we have chosen funds which are showing best returns in last 1 year, last 2 years, last 3 years. When you go to any of these Grow app or any of these ET Money app, they just show you funds based on returns. They don't show you funds based on your personal requirement. See, the general method of investing is 100 minus your age is your investment in equity. So suppose you are 30 years age, they say 70% of your investment should be in equity. But say a 30-year-old Samir and 30-year-old Yogesh, do you think we have the same financial capacities? Do we have the same financial outlook? You might be very aggressive at the age of 30. Me might be very conservative at the age of 30. So 50-year-old person who has no debt, who has got ancestral property, will have much more risk-taking capacity than a 30-year-old person who is the single bread earner for the family. That direct option cannot distinguish. Just and secondly, there are quite a few operational difficulties. If your bank account mandate has to be changed, if you have to change your SIP date, when you go to a distributor, he gives you the full bouquet of it at one place. When you go directly, you have to do it individually with everyone. It's like the same thing in insurance. Doing a policy with Policy Bazaar will give you lesser premium. But when you are lying on the bed to talk to a phone or to talk to Yogesh, you choose which is better.
And you're absolutely right, Samir. And this is very relevant for insurance.
Yes.
In fact, perfect way of answering this question. And what about the emotional ups and downs? One of the biggest role advisors play is to handle the emotional ups and downs.
Exactly.
Yeah, and I think that is what our rituals also told us. I mean, Krishna handled the emotional ups and downs of Arjun in the Mahabharata.
Yeah.
Exactly. The war was won. I mean, Vinod has a question to ask. I think Vinod has raised his hand.
Yeah, thanks, Ajit. My question is, now people are talking about a lot of, artificial intelligence and, data mining, data, all these things. Like, since the topic came about going directly, okay, I was interacting with one of the, directly like those apps or direct people. So they were saying that they had another thought process. They said that your provider might have only, maybe 10, 20, 30 or 100, whatever number of people who are there whom would know about, they will be dealing with. We as a big organization, we have database of lakhs of people. So are using artificial intelligence, knowing your income and then knowing your requirement or your plans. So that is what, there is the other way of selling. So this also we need to tackle being individual. We are not the large ones. We don't have that kind of, kind of money to pump in. Like, most of them, even like you took a classic example of Policy Bazaar. But at times that may not go directly into the head of the customer. So how do we deal in such a situation?
As I said, Vinod sir, if you see, altogether, all the money which has been pumped into all these apps and big companies and big platforms just holds 50,000 crores out of 40 lakh crores in the industry. The mutual fund individual distributors put together hold roughly about 12 lakh crore. If you add NJ and all to it, it almost becomes 15 lakh crore. So the individual, when persons are involved, what happens is till the time your corpus is say about maybe 20, 25 lakhs, I would say in today's age, you not even 20 lakhs, maybe 10 lakhs, you will give it to a bot or a website. Once it crosses 25 lakhs, you want to deal with the person, because what happens is that time you also have other implications like tax filing. You need to make the statements available to give to your CA at particular time. You need to also know a chatbot cannot understand that Vinod sir will get a 5 lakh additional kitty by selling some property. How do we handle that particular windfall amount and adjust in such a way that it is tax efficient for him? Because what the chatbot does, or the artificial intelligence, that has a proper algorithm that will put an algorithm, say there will be a 10% rise in your income year and it doesn't happen like that in today's world. There might be a 10% increase, there might be a 10% fall also. So to understand all those, it's very difficult. And what happens is they don't understand emotion. See, for if you make a retirement plan with the AI based fund, it will say you have to invest 5,000 per month, then you need to increase it by 1,000 per month. They will not understand that you need to make, you cannot continue with this particular SIP of 5,000, or you need to make some pause for it because you need to take care of your father's illness. You need to take care of some family emergency. You need to take care of, suppose your child is now planning to study in India only, but there is an opportunity which arises of getting a scholarship abroad, for which you might need to pay additional money. A machine cannot understand this. Machine cannot understand emotion. If we play with if we play just on knowledge basis, it's impossible to defeat a machine. But what you are doing is you are building an emotional bond with the investor. You are that investor's best wisher. You are in that family. You know his child, you know his mother, you know his father, you know his brother, you know his entire family. That is the connect which you have, which the machine will never have. So that is why individual distributors tend to manage much bigger corpus than any of these products. And also what happens is there are a lot of times when you need to sit with the investor and handle that investor through difficult times. If you go to see industry statistics, out of the SIPs which close, 83% of SIPs are direct SIPs, because they do these SIPs in the lure of returns. Just because returns are good, most of the SIPs which closed down during COVID time, which was the time you should actually have increased your SIPs, they were direct investors. Wherever they had distributors told them, stay put. Let us see, don't withdraw with a loss. A machine will never tell you. Machine will just give you an option of withdraw, invest. So that kind of build-up which you have can never be done. When these people are telling you to invest direct or we will take care, ask them, have they handled a single transmission procedure which involves multiple payments? You have done it. You will go with them. You will go with that family member. You will not just give that family member knowledge of how to do transmission. You will also be there as an emotional support for that person.
Yeah, really, actually.
Thank you. That is actually, I think that is a very, very valid point. Being connected with the family and that emotional touch.
And look at the statistics also, I think Samir has said amazing statistics. Around 40% of the AUM is with the distributor, and 83% of the SIPs which were closed were direct. I mean, this statistics actually, if the bots are asked to do an analysis of these statistics, the bot will go bonkers.
Absolutely.
And Vinod, so what happens is generally most of these advisors you see, they have multiple generations investing with them. Their grandfather must have started, then their father starts, then their children start. So they have this entire thing in a particular family. Most of them manage families, which will never happen with a bot or artificial intelligence.
Obviously, yes. Very true. Very true.
Yes. And any more questions? Anyone wants to ask something? Fantastic. Okay. Samir, thank you so much. It was a very, very insightful session. In fact, the statistics that you have given us were really eye-openers, and it gives all of us actually that feeling that we have just some of the queries that were handled just recently. The last two queries are actually one of the the queries are basically out of the psychological pressure that is being floating around through the apps, advertisements on their website. Also, they openly say that don't go to a commission agent. Come direct. These guys have been bombarding publicly, about how to not go to an agent.
Sachin, just to interrupt,
yeah.
If you look at all these companies are running on the model, which is basically Byju's model, or any of these models which have actually gone bust. They are actually not making money. All of them are loss-making companies. All of them are surviving because there is cheap money available. What happened is Byju's is really suffering because last year the funding started coming down. Everything in this world, whether you like it or not, originates from US. Once US starts raising interest rate, the cheap money will be over. If you see none of these companies have any prospect of even being profitable in next 10 to 20 years. So you ask them, the Grow is selling you. Ask them how much profit Grow is making year on year. Can you be with a company which might actually go bust in 4-5 time? Same with Byju's and all. ET Money. ET Money is basically surviving on the money which it is getting from Economic Times and the Times Group. But it is actually a loss-making business. The whole idea behind setting up these kind of businesses and giving you direct is not because they are in love with you. It's just because they look at you as a potential customer to sell their loans. Loans is the only way which a finance company actually makes substantial profit without charging any fee. So that is what their whole idea is. Paytm, which was such a blockbuster, this thing, Paytm is literally suffering and making losses. Paytm has become a meme and joke right now because they are continuously making losses. Now they are saying that we will grow our lending business, and that will happen, God only knows. So would you be wanting to associate with Grow or ET Money, which is just on borrowed money, which can go bust anytime, compared to the guy who you know from decades?
Absolutely, and someone who has been emotionally connected with you and adding value, with sincerity.
Because nobody gives free. They are not giving you free because they're in love with you. Yeah. They think that they will sell this business to somebody else, sell your data to somebody else.
True. Fantastic. In fact, Samir, thank you so much. And I would really thank all the participants also. I think we had a wonderful learning session, a good way to get into a weekend, especially the first month of the first new year. And then this weekend, like we are ending this first month on a very good note. So looking forward, Samir, for you to also join us in future and share your inputs. I think these are very valuable, and this kind of engagements actually helps us to go to the market with much more knowledge and much more rigor. Thank you so much, Samir.
Thanks a lot, Sachin, and thanks a lot to all the participants.
Yes.
For freeing up their time on a Friday night and coming to listen to us. Thanks a lot.
Thank you, sir.